It has been a pleasure getting invited to share my experience and insights from the banking industry. I hope that I would add some value to the current students with my experience, and if they have any queries regarding any career aspects in banking and even in the finance industry, they can just ask whenever they feel like. So I just wanted to introduce this through a small PPT, not very big, but just covering the brief points of this industry. So I'll just share my screen. So we want to explore the various aspects of corporate bankings, the industries and the clients that we say cater to in corporate banking, and the different kind of products and services that a bank primarily includes in the corporate banking segment. So as a bank, there are many verticals in a bank. One is a retail vertical where they adhere to clients like you and I, which is like the individual customers, and there is a corporate banking where they meet the needs of corporate clients, and then there is investment banking, there is capital banking. So there are a lot of verticals in bank to cater to different needs of different segment of the customers. So I have been a part of the corporate banking from last 6.5 years, and I have had a journey across two different banks. So ICICI was a domestic bank, and it is like a systemically important bank in India. And I have also worked with HSBC, which is like one of the major players in global banking scenario. Currently, I have switched to a fintech firm, which is also a standard chartered venture firm. So it is into trade financing. So it is like I'm trying to learn a new product and a new culture and new company. So that has been my experience so far. So I'll just introduce corporate banking. Corporate banking consists of asset, which means like the loans we give to the customers, and the liabilities, which means that the different kind of accounts that we hold with the customer, where they deposit the funds with a bank. So in terms of the current account, the savings account, different various kind of accounts. So in India, like the major trends in banking, whatever has been going on in the last few years, is that India's banking sector has witnessed a very rapid growth, and this is definitely fueled by the economic growth of the country. Also, the banks have under banking industry has undergone major changes. The NBFC, the fintechs, and the regulator, everyone is has undergone major changes in the last couple of years, and which has definitely led to the growth in the banking industry. And all the banks have definitely reported growth over last year. So say HDFC, ICICI Bank like to report like 12 to 20, 30% growth year on year. But there are smaller banks also which also definitely report growth year on year. And the market cap of each of the banks have also increased over the last 3-4 years if you take. So in India, there's a lot many banks are there. There are public sector banks, there are private sectors, there are foreign banks, and there are banks with only one or two products in India. So State Bank of Mauritius, they have one branch, or Shinhan Bank, they have one branch. So it's a very diverse landscape. I'm not here, I'm not even touching the fintech landscape. Only the banking landscape is also huge. So this is like a huge landscape of banking and finance industry. There's another angle which is like the regulatory framework. So all the banks need to comply with the regulator, which is the RBI, and time and again they need to meet the compliance and the operational and different kind of risk management regulations by RBI, and which keep on coming to banks on a quarterly or a biannual basis. And there is a lot of audits also that are going on in bank at any point of time. So that is also a major part of any Indian bank. And there another thing that is like key nowadays is the digital transformation. So all the banks are trying to make their journey totally digital. They are trying to have like digital onboarding, and like they are trying to have paperless banking. They don't want to have like any customers coming to with physical documents to the branch, and then they don't want to process checks, cash, and DDs. So they have made the journeys totally digital with mobile banking, net banking, and so like even UPIs and access across different levels of the company. So like even the lending and even the submission of all the documents are happening online now. So like different banks are at different stages. So personally, I have worked with ICICI. Like I can say that ICICI is the top player in digital transformation. So it is the most digitized bank, and I have also worked across like with the partners from different other banks over my career, and I have definitely heard this feedback that ICICI has a very good digital platform, and this is because ICICI continues to invest in its digital like digital development or developing its digital modules and adding on new products, new services for its clients. Similarly, HSBC has a different kind of digital platform where HSBC has tried to integrate all the countries in one net banking. So in HSBC, you have like you can, even if you have a HSBC account in USA or Australia, you can have a single access to all the bank accounts from India. So HSBC is also definitely a larger player, and it has a different flavor to its net banking, to its digital journey of like client onboarding and everything. So each bank has its different, like is at different stages with respect to digital transformation, but definitely all of them are going for this. So I'd like to proceed with a different kind of products that a corporate bank provides to its customer. So generally, a corporate bank deals with different kind of customers. Like different segments are there. So we have segments like we have startups, then we have small medium enterprises, then we have mid corporates, large corporates, PSUs, government bodies, and then there's like MNCs, ITs. So a bank at a scale of ICICI or HSBC definitely likes to bifurcate this like into like two to three like different segments, like MSME banking group, or large corporate banking, global banking, and they want to have specific and solutions for each of these verticals, like so that they can focus more on like delivering the right product to the right set of customers. So that is why they have done this segmentation. It is very prevalent across all the banks, like these kind of divisions that you can see. And there are different kind of regulatory frameworks, and the lending frameworks that they follow, and the requirements of customers are different across this segment. So what an asset means is like we are lending to a client. So in corporate, generally there are three kind of loans. Like there can be many loans under like these broad headings, but a corporate which needs like funds for its day-to-day operations, so that that is called working capital solution. uh, if a like working capital solutions, it is generally a very short term. It can start from 6 months, 3 to 6 months, and then it can go up to 1 or 3 years. But after that, like if something is becoming like more than 3 years, 5 years, or 10 years, then it is under the category of term loan. And project finance is like definitely a large project that is coming up, like there's a solar power plant coming up, or a metro project that is coming up. So these are different kind of projects, or a SCZ is coming up. So this comes under project finance. So these are like different companies undertake this like different kind of projects, and they are also like the requirement of lending is also different, and the evaluation of financials is also different in all the three cases. So coming to working capital solutions, mostly what they do is they try to fund the working capital gap. So if if the students have heard like in even the finance 101, they will know that they how to calculate the working capital gap, and like whatever they want to pay to their vendors, and whatever they are supposed to get from the customers. So there's definitely a time gap of 3 to 6 months, and in order to fund their operations during that 3 to 6 months of time, they definitely approach the bank, and the bank provides them with what you call a cash credit limit or a overdraft limit. In most cases it is collateral backed. So and like it collateral also depends from company to company and industry to industry. So if a company is very highly rated, so like in companies also we have a rating system, like we have CIBIL score for individuals, we have for companies we have CRISIL or CIBIL data is there. So similarly we can find out what is the rating of those companies. If something is triple A, which means very good, then the collateral and the pricing would be different for the like company. If it is like triple B or double B or B minus, then the pricing of the loan or the collateral requirement would be much higher. So, and even if the industry, if you see, so if say now the focus of government is on EV, so if a company is into EV, so in that case, they would try to like enhance the support for this certain industries. And some industries are like some banks are averse to certain industries basis of their internal risk-taking appetite. So accordingly, they structure the collateral and the pricing part for different kind of clients. So most common is the cash credit and overdraft limit. Sometimes if a company is engaged in export, they can undertake export credit also. Like export transactions are generally less than 6 months. In the if any funding is required during the manufacture or the shipping of the good or after the shipping, banks provide the funding at different stages, and so it is called export credit. And in working capital, all these solutions are called fund based. So there, this is actually we are giving cash to the client, like cash or any kind of like actual money we are giving to the client, and so it is called fund based. And there are other kind of facilities which are called non-fund based, where we are just giving a kind of guarantee to the client that if the client fails to pay, the bank would pay on the behalf. So that non-fund based kind of products are called, like the major examples are letter of credit and bank guarantee. So I am not sure if letter and credit and bank guarantees are covered in MBA courses. It's like once you enter the banking sector, this will be like a very new learning. Is like a guarantee of, like say, a performance guarantee is there. Different kind of guarantees are there. So say if I get a contract, so in order to get that contract, I need to ensure that like while placing a bid for the contract, I need to ensure or like convey that I have that sufficient capacity to undertake this project. So I have, if by the government regulations or by the like regulations of my client, I will be required to place a bank guarantee of 2 to 5% of the project value. So it means that if you get a project of 100 crores, say a government project, you undertook a bid, and if you won the bid and you now have a project at your hand, say a metro development project of 100 crores, so at your hand, so you will be at the first stage only, you will be required to submit a bank guarantee to get the project. So the bank guarantee can be between 2 to 5% of the value of the project, and later on you are also required to submit the performance bank guarantee. So like it will be valid for 5 years, or maximum it is for 5 years, and then you have to renew it. But like say like performance, like if any issue is there, then the bank can the say L&T is your partner who has given you an order to build a metro, and so L&T can go to the bank and tell that this client has not built the product correctly, and I just need to like liquidate the bank guarantee and I need my funds back. So this is like a guarantee of performance, or of like the bank company not going bankrupt over the process. So say I give an order of 100 crore to somebody, and the company is developing the product, and suddenly it got bankrupt or something. So my project is facing some loss. So I can go to their bank and claim or liquidate that bank guarantee and get some funds in lieu of my loss. So bank guarantee is kind of a guarantee. It is not direct cash related product. It's kind of a bank guarantee that customer needs to provide by placing some funds with the bank. So I cannot provide bank guarantee without having any lines, any credit with the bank. I need to first get my financials evaluated. I need to get my credibility checked. Only then the bank will provide a bank guarantee. So it is non-fund based product. Similar is letter of credit. Letter of credit is obligation to pay on the date set date. So it is a document that said that my client is obligated to pay on, say, 50 days of after 50 days of this transaction. If the client fails to pay, I will pay this amount. So it is also a guarantee kind of a thing. So this is also a non-fund based limit. So these are the major, these are the most frequently used products in working capital solutions across industries. So these are some examples. I'm taking a break here if anyone wants to ask any question. So, this is about working capital, which is a short-term financing. Then there's a term loan, which is definitely based on the evaluation of projections of the financials of the company. If the company is projecting that today it is like a 500 crore company, tomorrow it will become 800, then it will become 1000, based on certain of the expansion plans that they have in place. Like they want to acquire a land or a machinery, they want to set up a new project in set up a different factory or a manufacturing vertical. So in that case it is a long term loan that they apply for, and the financials and the working of this loan is very different from a working capital, which is a day to day kind of financing model. So, and the project finance, as I told you, it is if a big project is coming up, which will take around 10, 20, 30 years to complete, like a SEZ is coming up, or power plant is coming up. So that is under project finance. So banks have totally different verticals to take care of project finance. And some banks have only appetite to some of the segments. It's not a very commonly availed product with any bank. So nobody has nowadays bank want to go for more of like working capital and term loans, and many bank don't have any exposure to any kind of project financing requirements. So only a set specific some banks only do the project financing thing. ICICI was very famous for doing project financing. It actually started as a project financing bank, and then later it came into retail and then into corporate. So this is how the asset product is based, basically the loan that we provide to the customers. This is one leg of the corporate banking. Another leg is that what we get from the customers. So how do we make money from the customers? We definitely make money from the customers by making them utilize our products. So what are our other products other than loan? Is a very simple, like we pay them, like we give them some loan and they will give us some interest. So that is called the interest income. Okay, so if we give them working capital, they will give us working capital interest. So it will be called working capital interest income. So similarly, for any kind of loan, there will be an interest discussion, and the company will be required to pay it from time to time or based on utilization levels, and that is how the bank earns interest. Bank also has earning with different other set of products that it provides. So we come to liability products. Liability products are very simple in nature. It's all the companies which are private limited, LLP, or even partnership companies, proprietorship also. Mostly they prefer to have current accounts based on the regulations. Which help them in tax filing and everything. So they are required to open current accounts. So current account is, we don't pay any interest in current account. Current account is only used for transactions, unlike saving accounts where the bank has to pay any kind of interest. Corporates mostly have a current account. Very rarely does a corporate have saving account. Saving account is only used for any kind of trust or NGO kind of where they're exempt from opening a current account. But like 99% of the corporates will have a current account. So that is the one kind of account. And obviously, like if you need to avail a loan or avail a facility, you need to have an account with the bank. So the account the corporates have with the bank are called current accounts. There are different kind of accounts to suit to different kind of needs. Some companies also go for capital account. So capital account, as in if they are expecting a huge foreign direct investment, or they want to do any overseas investment, they try to route the transaction through capital account. So there will be some features of the account will be different than a regular current account. And then there are like the liabilities have a very important product called term deposits or fixed deposits, which like definitely it earns for the bank, because banks are offering fixed deposit and then they're also having some margin where the banks earn. And then there are different kind of types of account called escrow account, dividend account. Nowadays for real estate, RERA account is mandatory. So these are various suited to various industries. There are various kind of accounts that a company will be required to open with the bank. The bank benefits in a way that the company will definitely keep some funds with the bank. So the funds in current account, they generate income at a very high rate. Like if I think 5 to 6% in bank earns. So if you have 100 crores in the current account, a bank will earn 5 to 6 lakhs in a year with that account. So that is like an average calculation. Based on the other operational costs of the bank, but normally between 4 to 6, 5 to 6% the bank earns because of keeping the funds in the account. So and then we have capital accounts where the FDI and ODI transactions, there will be huge processing fee for each of the transactions. So the bank also earns in terms of fees. And term deposit, as I told, like deposits, the earning is quite less because we are passing on the like interest to the client. So the earnings are little bit less in deposits. It is like 0.5%, 1% of the transaction. That is the maximum that we can earn. And over the like other accounts like escrow account or dividend account, CSR account. So these kind of accounts, the bank can charge account opening fee also. So that way the bank earns through these accounts. Now we can come to the different kind of products that are offered by the bank to all the corporates. So other than the loan and the accounts, we have all the banks now have a lot of products to like enable customers to do their transactions. So once we give a client any loan, the customer will definitely want to do some payments or some collections or some other kind of management of its books, so that they can do their regular day-to-day transaction smoothly. So I can get like I if I have a company, I'll obviously buy from a place. Say I have a manufacturing company, I'll buy raw materials and then I'll sell it to some wholesaler or a retailer, anybody. So I'll definitely need to make payments to my raw material supplier, and I'll definitely need to receive payments from the retailers. So all these kind of banking solutions are provided. I think most of you would have come across many of the solutions, but from a corporate angle, the solutions are much more customized for each of the customers, and there are a huge variety of solutions each bank is trying to offer. So RTGS, NEFT, IMPS is like very easy to understand. Then we have UPI, we UPI based collections, so QR code and other scanning, so that you can collect the directly. Somebody can pay you by scanning your QR code or UPI ID. Then the banks also provide integration with payment gateways. So suppose I have a website and I can integrate with a payment gateway so that my customers can pay to me through the payment gateway. The banks also have various kind of virtual accounts and ERP integrations. Virtual accounts mean like I have one collection account, but I have to provide unique account number to unique retailers. Say I have 10 retailers, so I have only one current account. I can provide current account underscore one to retailer number one. Then I can create like underscore one, two, three, four up to 10. So different kind of virtual accounts which are linked to my original current account, so that when receiving the funds from various retailers, I know that this came from retailer one, this came from retailer two, this funds came from retailer number three. So this kind of unique products that a bank are having for different kind of clients. And they are also having ERP integration nowadays. So they can integrate with the SAP and if they have SAP, Oracle, or any Zoho or Tally. So different bank software can integrate with all these software via API mechanism. Or sometimes there is a elaborate technical integration that happens for some large corporates. Banks also provide auto debit facilities, and all the traditional collections are obviously there with the bank, like check and demand draft, cash collections, and point of sale machines, and deposits over the counter. So I can go and pay to a bank. Like I want to submit this cash in the name of my customer, or like banks also have this facility called cost cash collection. So ICICI used to have this facility where they have a third party vendor arrangement who goes to the retailer and collects cash and brings it to your customer or to their bank account at the day end. So they have two times to collect the cash, once in the morning and once in the evening. So banks have very elaborate solution designed for different kind of segment needs. And similarly for payments, any company will need to do certain type of payments, and banks have tried to streamline and make these services very easily accessible to their clients. So like for salaries is a payment that any company will do. Then there is a payment processing for their vendors, invoice payments and reconciliation. Then there are corporate cards for business expense like travel expense, admin expense. So all banks provide corporate cards. Then there are some companies need to do in different kind of tax payments, custom duty payments, and utility bill payments like electric bill, telephone bill, and different kind of bills. So banks have various products around payments to enable customer to access all this very easily. And then there is like anyone needs to do online cross border transaction. So banks have this FX that they can do rate booking online for all the like outward remittances or inward remittances. So they can book the rates online, they can have hedging facilities, they can have a dashboard where they can see the market rates, how they are fluctuating, and they can get insights on the rates and how the performance has been. So different kind of MISs are being facilitated by the banks. In fact, the customization level is so high that if you or I as a customer go and request for like my account statement at like every 3 hours, then the banks are able to provide based on the like client requirement and the bank appetite, definitely. But like yeah, so the level of service that the banks are able to provide now is very high, and definitely service is where the banks compete for customers, so like with the different kind of products and services. So this is how the banks are competing amongst each other. Nowadays, there are a lot of API based products also, like API based products, as in banks are tying up with, say, Zoho. Zoho is a accounting software. So bank would like integrate through API mechanism with Zoho. With a payroll software, say there is a company called Great HR. This is a payroll processing company. So the banks will integrate with payroll processing company through API. So these are how they are trying to reduce the work of the customers. Even the payroll, if they just make the payroll, bank will auto fetch the data and will push the payments to the employees. So all this, like if they just make the ledger for payments in the Zoho or Tally, banks can auto fetch the data, and at a certain specific time they can push it for payment. So this is how the API banking services work. ICICI has more than 200 APIs. You can like choose and make anyone live. HSBC has around 20-30 APIs which are very unique in nature, and they don't easily integrate with all these kind of partners, but definitely. But like this is the competitive edge that the banks are going for nowadays, to provide additional services which are outside their core banking areas. So these are the two main verticals of corporate banking. One is the asset side and one is the liability side. So another part, like which will also come under transaction, regular transaction. So regular transaction, customers have collection payments, but some of the customers do also have trade payments. So in trade, like it also refers to export and import related transactions, and some of the banks have very unique set of services around this export import transactions. Not all banks are at the same level in this. But like the base product would be same. they sometimes export import transaction, how it works, the level of confidence between the buyer and seller is very low in this kind of transaction, because none of the parties know each other physically. It's a cross border trade, and so geographically also the distance is so high that you cannot go and get your collections by like physically reaching to the person. And the regulatory frameworks across different countries is also like a major factor where the people don't have confidence on the other countries or the other companies in different geographies. So that is where banks come into play, where banks enable the trust between the parties by providing various kind of like support and services. One is the letter of credit. Many export import transaction happen under letter of credit, which is an undertaking of payment if the importer fails to pay on a due date. So letter of credit is if the company is going to deal with a new buyer, like India has an exporter who is going to deal with a new buyer in a new geography, definitely the Indian exporter can ask for a letter of credit, and definitely the other country will provide a letter of credit with any XYZ bank of that company, of that country. That bank may not be known by our exporter, so our exporter will now request, like, please route this through a bank which I know in India, say SBI Bank. So then this becomes a correspondent bank, and then from SBI the payment will come to the current account of the exporter, which is again say held in say Dhanlakshmi Bank. So there are multiple engagements of multiple banks in these kind of transactions where the level of trust is very low, and hence trade finance is also another important leg of transactions that are happening in that happens in corporate banking on a very frequent basis. Even in trade finance, there are a lot of financing activities that happen, like before making the shipment, if the exporter need any credit, after making the shipment, if there is any interest subvention, any discounting of invoices. So all these, if you enter the banking industry, you will get to know much more in detail about the transaction flow that happens. Trade is one of the very critical aspects, like where RBI regulations are very high, and obviously you need to read a lot of materials to know, like what goods are allowed, what services are allowed, what are the export terms that are allowed. So it is like another subject in itself, and it is also very interesting. So in my work experience, I was earlier with the liability side of banking. I was into cash management and different kind of product sales. I have handled asset for a very brief period of 6 months. It was kind of a training, but I'm not from an asset or a lending or a financial analysis kind of a background. And now I am into trade financing. So I have switched to a company which is into particularly trade financing. So I would like, if you like to reach out to me later on about this, I can explain in much more details. And I can like move to the next part. I'll also tell, like, the bank plays important role in trade, where the documents of trade and the payment, uh, all these flows through banks, because banks need to report to RBI like what is the like export. So export and import happens in different currencies. So there is a reporting to the Foreign Trade Director General of Foreign Trade, DGFT, and Customs Duty Portal, and all of this reporting needs to be done by the bank. So anyone who is exporting will need to have a bank account, and the export transaction or import transaction must be handled through a bank. So that is where banks come in place in this corporate banking scenario. So trade is also an important part. And so now we can come to digital banking innovations. So how the future of banking is looking. Already we have reached some of the like already we are seeing some of these implementations in with like at the current stage. But in future also, what is going to happen is, like, a lot of companies are investing hugely, including HSBC and banks alike, in fraud analytics. So different kind of money laundering or tax evasion, like all these kind of things can be captured with analytics and AI based transaction monitoring. Like, say if somebody is routing a transaction, say I am routing it to my brother and then to my cousin and then getting it back to myself, and just showing it as a trade transaction, like all the parties are related, but I'm just showing it as a sell or a buy. So this is kind of like money laundering that happens, and this is like with a different kind of analytic software. Nowadays, it's very easy to catch these kind of customers or shell companies that we call, like with same owner and same beneficial owner who are just doing the transactions for the sake of it, just to hide some other transactions. So AI can like find out these kind of transactions, and we as a bank need to report all these kind of transactions to RBI. And financial evaluation, document processing, all these kind of things can be undertaken by AI. So if we have a collateral or a property document, then AI can read it, or any kind of financial statement analysis. So all these like solutions are coming up with banks. There is another technology called blockchain technology, which is not very rapidly being adopted. But yeah, people are like just trying and testing it. So doing transactions based on blockchain technology. So like for transparency and for like enhancing the security, some of the transactions banks are doing on blockchain. Even the trade transactions, so letter of credit and trade. So it's on a trial basis as of now. API integration, as I told, API integration is a huge part. Like they are building an ecosystem. It's like 360-degree view of a customer that they are trying to capture through API. Today, if I have like say as a customer, I have to do salary payments. So my bank will have API integration with a salary or a payroll provider. I need to do tax payments. So my bank will have access to the tax. I need to do a invoice payment. So they will have a invoice like they will have tie up with some providers where you will be able to do invoice payments very smoothly. They can even finance you at the invoice level. So different kind of API integrations are going on at various banks. We have digital KYC nowadays. You don't need to go to the bank. You can just do digital KYC, and there's a digital onboarding, total digital onboarding with many banks nowadays. UPI, as I told you, for getting payments and giving payments, even in corporates, UPI adoption is huge now. And data analytics, so that we can improve the customer service. So data analytics, earlier as a RM or a key account manager, you had to understand which customer is paying to which major party, or like how much of the payment is going outside India coming. So you need to have to check the account statement. But with analytics and customer intelligence platforms, you can get this data at your hand, and you can make efficient decisions around the data, and what to pitch and when to pitch to the customer. And then they have chatbot and digital journeys for each or every products. Like if you have to submit a trade document, you don't need to come to a branch. If you need to like access any funds, you don't need to come to a branch. So like a customer experience, they are trying to like make it like the best. Each and every bank wants the best customer experience, and like reaching out customers at different level, with different languages, different offline serving capabilities, to the rural areas also they want to reach. And so they have different models for reaching out to rural areas, reaching out to different segment of customers. So all banks are focusing on like reaching to more and more customers. So this is also like as a part of corporate banking to increase their book. So I have already covered this different kind of customer segments that we have. um, so like if you go for a career in banking, you can start you can be like start with any of the segments and like understand. So I would like just give a brief example, like say as I gave you an example of a retail company. So a company, say like a D-Mart. So a D-Mart would what facilities, as a corporate, D-Mart is a corporate, D-Mart is my client. As a bank, if I go to tell D-Mart like what are the solutions that I want to offer to you, what are the things that I can tell. So it is a part of the retail industry which has a very high amount of cash collections and point of sale collections. So I will definitely pitch these products. Like we have like cash collections, we have POS machines. We will pitch like merchant payment gateways like Paytm enablement or say enabled through GPay. So different kind of merchants. We will definitely pitch like if you have any requirement for any inventory funding for any inventory, short-term inventory. So this is how we'll go and pitch to DMart. Like we have different branches. We have a branch at your proximity, so that you don't need to travel a lot to deposit or withdraw any cash. So retail businesses have a huge requirement of branch connectivity and network. And so if my bank is able to offer these solutions, definitely I can go and pitch to the retail. Um, the working capital solutions, the point of sale, the integration with Paytm, Phone Pay, the merchant bankings, cash related, check, everything. So I can go and pitch to a retail company. Similarly, if I go to a manufacturing company, so if I my company that I'm dealing with is into chemical manufacturing. So I they have to procure raw materials or they have to give payments. So definitely there is a working capital gap they will have based if it is a like rarely are companies very cash rich, so they will have a working capital gap. My discussion with them will be around like what kind of funding can I get them, if they need any equipment, what kind of equipment finance can I get them. So mostly around the financing, equipment, and the working capital management. Manufacturing companies won't be much interested in like what like say products like API integration and host to host or ERPs. So they will not be interested in that so much, more so than like if we can finance them in certain way, so that they can increase their sale. So that is how we can pitch to a manufacturing company. For any export and import company, we can definitely tell that we can finance you after your export shipment, pre-shipment export. We can provide you like the best forex conversion rates, and the turnaround time for the transactions are very less, because we do the if we get the import payment with the bank say at 10 o'clock, we can give it to you at 2 o'clock. So like at in certain cases the timing also matters, where how fast you can turn around the transaction, that will help, and that majorly helps with trading companies. So any exporting or any kind of trading company, they have to have a turnaround on a day to day basis, so or on a weekly basis, so that they don't have a lot of inventories or they don't have a lot of products to manufacture, and the working cycle is very less. So the more you can pitch around the turnaround time, and especially some export companies are dealing with say steel exports or steel imports. So if you don't turn around the transaction, the prices may increase in the global market by the time that you are making the payment, and definitely the exporter will be hit or the importer will be hit. So you can pitch around the digital journeys that you have for this, that you don't need to submit the document, and the turnaround is very fast with us. So and the FX rates are very good with us. So these kind of products you can pitch to an export or any kind of trading company. For IT companies, what they don't have a lot of operational headache. They have only the customer salary, the employee salary payments. So IT companies mostly employ a lot of staff, and like so service exports is one thing that you must discuss with them if they are doing any service exports. And salary, around how you can make their life easier around salary and other kind of admin, corporate card expenses. Say you can tell them that we have this corporate card. Sometimes they need working capital, but that is very rare for IT companies. If we take an example of an infrastructure company like L&T, so they will need huge limits in terms of bank guarantee. They will need huge limits in terms of equipment. They will also need project finance, long-term loans. So most of the companies will have a requirement of term loan along with a short-term loan. So that is how you can like once you go into the industry with your interactions with customers, with your knowledge of industry, you can discuss and you will get to know more. This is just an example of like what corporate bankers do on a day-to-day basis. So, um, so if you go to a corporate banking, along with the finance aspect of the role, your role will be to interact with more and more clients. So you can either be in the client acquisition side, or you can be in the portfolio management side. So where you are managing a set of portfolios. So, some key things that I learned over the period of my journey, I would like to share are that like industry, you have to have an understanding of the industry, say manufacturing, IT, different industries that you deal with, you'll get an expertise. And also with various database that you can access and see the reports, the financial reports and everything. So you should be pre-prepared, like not like dependent on the customer to share the data and everything. We should be pre-prepared like to know like more and more about the customers before going to meet them or before asking anything from them, so that you can also know that if we can do this case or not. The other thing is that a lot of strategic partnerships help in customer acquisition. So suppose if I am into a vertical which takes care of IT and MNCs, so if I tie up with a STPI or a technology association in that place, or some startups which are in tech, so there is a firm that would be like around working with startups or a VC firm, something like that. So a lot of strategic partnerships and professional networks so that you can expand your reach to the clients with like your presence. So that is also one thing. And obviously like you'll have to do a lot of outreach to the customer directly through calling, through requesting for meetings, through attending some events, like if there is an export event going in your city, or an startup event going around. So you can attend those events and like just give a hint about your products and services. Then there will be referrals, and definitely like digital engagement and like you have to be very active in knowing like what is happening around you. Like is the company that I am going to deal with, is it acquiring any new land? Has any company announced any expansion so that I can go and meet them and request like for banking partnership? So these kind of strategies, like you have to be very like getting around the news and just checking like which companies has been filed for like new companies that has been filed. So all these kind of initiatives you have to keep on checking. So this is for some of the customer acquisition strategies. And the other part is obviously you will be given a set of clients to manage. So set of clients to manage. The customer acquisition is to acquire the maximum number of customers over a period of time. To manage the customers means that you need to improve the revenue from each and every of the customers. So wallet utilization, as in that if I have given them 100 crore loan, a company will not only have your bank, they will have 10 other banks where they will have 50, 20 crore loans or different kind of loans. They will utilize the loans of those banks where they have the comfort or the better service. So you have to focus on your wallet utilization, your product additions, and you have to achieve customer satisfaction through service and through pricing. So your pricing, if it is very high, then they will definitely not use the product. Even if you give them a cash credit limit of 500 crore at a very high pricing, they will not use your product. So some companies need to have a very fine pricing margin. So this is how your like you need to navigate between different kind of products and services and pricing to achieve the maximum from the customer for your bank. So here there are some points. The major is that you need to build the expertise around the industry, around the customer. You need to have the business model, know the business model of the company, the cycle, working capital cycle. You need to have a strong relationship with all the levels of management in the company. So manager, CFO, CEO, director, promoter. So you need to build a, like try to reach to the next level all the time. Like if the decision making to with whom the decision making is, you need to spot that person and you need to make a good relation with that person, so that if there is a requirement of any data, if they have not repaid the loan in time, so you don't need to you need to find that one key person in the company who will help you in these times. So this is also like building a rapport which comes in a which is like the one of the main things in this role. And also like if you identify some of their challenges and resolve this actively, they will always be faithful to you. Like they have a problem with customs or some RBI, and if you help to resolve them, they will be faithful. Like they will be faithful that this person has helped me resolve, they have the expertise, so I can trust them with my company. So that is one of the things. Another is that you have to be proactive in like dealing with customers. So my experience has been like if there is any information that you have and you have not shared, and like any pricing update is there, so if you have to share like any regulatory changes that are there, so you need to share, and also use this as occasions to meet your clients and take feedbacks from them, like how is it going with your bank, or if they're facing any problem. So the more the communication is, the more you are in touch, the more there is a stickiness, and like they will rely on you and they'll trust you. So that is also one of the portfolio management, you have to work on this in banking. Another thing is that data driven insights. So banks have different projects that they run, so that they can see like what customers are paying to which vendors, so that they can capture the vendor also. So next they will see that, say I have a company called Dr. Reddy's. Dr. Reddy's is paying to ABC Chemicals. So the data driven insights, what they do, they will see that ABC Chemicals is a good customer of Dr. Reddy's. I can use the reference of Dr. Reddy's and go to ABC customer and try to approach them for a banking relationship or a lending or any kind of opportunity. So this is there, and any kind of financial recommendations also, data can help you with a lot of things, definitely. And also like service. So service, when it comes to service, your role will not be to do the actual servicing, but mostly it will be to coordinate with various stakeholders like operations team, trade team, FX team to take the rate. If you need to give any demand draft, so obviously you will be dealing with the general banking team, the cash team. So you will be dealing with a whole set of product, and if there is any escalation, obviously to your manager, and in a lot of internal stakeholders you need to manage to take any approvals, any pricing approvals and all, so that you can provide a seamless service and meet the expectations of the client. So this is like what is broadly client portfolio management. Um, and lastly, I like to cover like the career paths in corporate banking. So you start as a relationship manager, key account manager, or a AVP. Then next is after 3 to 4 years, you move to chief manager or a VP grade. It can, from a relationship manager to chief manager, can take 5 years, maximum 5 years or more also. It depends on bank to bank. Then you have a city head or senior vice president, where you have to take care of the entire P&L of a city, and you have to manage the entire, like other people also, not only the sales but the service and the product sales and other people also. So that is like after VP, you can say another 3 to 4 years minimum, then you can go there. Like from relationship manager to city head, you can take 10 years, like if you are at an average pace in a bank. If you are into a high growth, then 5 to 6 years minimum. And so and zonal head is like after city head, there's a lot of competition basically. So if you stand out, then zonal head, it's somebody is like who is having 15 years of experience or partner. And then definitely country head. So normally, as of now, like banking is a very hierarchical organization. So you have like a managing partner will have a 20 years of experience, and definitely experience in banking like builds expertise. So and a trust with the customers, and also this is how the career is placed as of now in banking industry traditionally. And so this is where I would like to conclude my PPT and like my experiences. Now I can open for the platform for question and answers.
Right. Thank you so much, Shristi. Anyone who has a question, please feel free to raise your hands, and you can ask your question. You can also put them in the chat box if that is convenient for you. Actually, I think let's give everyone the time. I have a question of my own meanwhile.
Okay, yeah.
Um, so I sort of wanted to know what sort of experiences on campus did you have that pushed you towards this field and finance in general? So anything on campus that you felt would have been really good with considering your work ex now. Any sort of those experiences.
So on campus, I think I took a couple of electives around banking in the second year. So I took corporate banking and I took investment banking, and emerging like strategies for banking in emerging sector, emerging countries. So these 2 to 3 subjects were there. I think one was a workshop. So this actually when I have done my MBA, so I have took a balance of marketing subjects as well as finance subjects. So I have a lot of banking subjects. Sorry, I have a lot of marketing subjects as well. Like I have market research. I have had B2B sales, like key account management and marketing research, so luxury brand marketing, so a lot of marketing, and along with the consumer psychology, brand management, so a lot of marketing subjects along with a lot of finance subjects. So this mixture actually, I think it helped me in cracking the interviews toward in this banking segment. And also a lot of banks visit the campus, banks are one of the major hiring segment in the campus placements. So, and once, as I told you over my PPT, if you have like even like 20% of the idea of this, and if you have the knowledge of the current affairs and like how the economy is doing and everything, no, if you are a well-read person and a well-versed person, so your chances are of getting an interview selection in an interview selection is higher that way. So that is what motivated me, like my selection of subjects basically, like banking and marketing, banking and finance, mixture of that.
That answers my question. Thank you so much. Anyone else with a question, please feel free to raise your hands. Okay, seeing as there are no questions, I'll just conclude the session. Thank you everyone for being part of the talk. On behalf of the alumni committee, I would like to thank you, Shristi, for taking your time out on a Saturday evening for us. We're all really grateful for your insights, and I'm sure we'll all gain from it. I would also like to thank the Chair, Alumni Affairs, Professor Prabin Panigrahi, for his guidance and support, and all the alumni office whose efforts make this talk a possibility. Finally, a big thank you to the audience for their presence. We look forward to seeing you at our next session.
Sure, sure, sure. Thank you so much. Thank you so much. Have a great evening.